Hey there, it's Tricia with Easy Emini Trade, and I want to go over reversal trades and counter trend trades, and you can decide if it's going to be something that you're willing to add to your trading plan or not. I'm going to go over some setups from Friday morning, but I'll go back to Thursday so I can show you a few better examples of those reversal and counter trend trade setups. Also, I'm doing a webinar on Thursday the 3rd at 8 p.m. Eastern, and if you'd like more information about it, just go to www.easyeminitrade and click on the webinar tab. It's going to be on the Kaboom, but also I'll be going over how to use the ADX on 3 different time-based charts to keep yourself out of the chop, and really excited about how that's working out, so I hope that you will be as well. So I'm going to show you the NQ for Friday morning, and usually on Fridays I'm trading by myself. I don't have the room, and I'll usually trade the Russell, but on Friday I traded the NQ. So I don't do anything right off the open. I like price to decide what it wants to do, and then I'll be willing to take an entry. And right here we get a pullback to our moving average right here, and I take an entry at 9:35 as a buy. And usually I don't like to take pullback entries in the area of the 50% fib retracement or the previous day's high, lower, close, because it can price can tend to get stuck there. But I felt pretty comfortable in taking this with the anticipation of price finding its way back to the close from Thursday, which is right above me in yellow. So I take this as a pullback entry. If you didn't take it there, you could have certainly taken it here at 9:38, and same target area in mind if you didn't get in back here. Now it comes up to the close from Thursday, and we expect that the likelihood is that it's going to hold. Now reversal trades are done after a large move in one direction or the other, and after price has moved away from the 9 weighted on the higher time frame. So this stair step looking line is the 9 weighted from the 1597 tick chart of the NQ. And so you can see the space there, and what you would do is you would expect price to find its way back down to the 9 weighted. So when the indicator crosses below 0 here, and you've got the 30 weighted starting to color for sloping lower, you take a short with the expectation that price is going to find its way back down here. When price moves away from the moving average, either price is going to find its way back to the moving average, or it's going to stall and the moving average will find its way back to price. It doesn't matter what moving averages you're talking about, that's what's typically going to happen. Just like here when you look at where we take pullbacks, we always take pullbacks to our 30 weighted, pulls back. So same situation here. We're expecting price, if you look at the higher time frame, to find its way back to that 9 weighted. So the key to that is you're only taking it after, at least for me, I'm only taking it immediately following a move like a strong move in the opposite direction. So here's my strong move, and now I'm going to look for a short to fill this space. And the key is the space. If there's not enough distance between price and the moving average, then don't take it, because what's going to happen is this could stall here, and then the moving average takes another stair step higher, and now it's already filled that space. It works out really well. Later in the day, you may choose to use like a half point range chart, a 2-tick range chart on the NQ. In the morning it's just likely going to be trading a little bit too fast for you, but you can apply it and use it on any instrument and on any tick chart. The key is that you might have to drill up to a larger, higher time frame in order to have price creating some distance between that 9 weighted. Like for example, on the Russell, using a 6-tick range chart as your entry chart and a 1597 as the broader view, very often price is hugging that 9 weighted. It doesn't move very far away from it. So then in that instance you may try to use something larger to look at just for those reversal trades, like maybe a 2584 or 3,000, whatever it is. But the key is that it has to be creating distance between price and that 9 weighted. So there's a setup here as a pullback. Everything's in line to take it, but it's a little too close to the news for me at 9:55. I like to use 9:45 as my line in the sand. If I haven't done anything or I'm not in anything by then I just wait till after the news. And 9:55 was when we had news coming out. But that's my personal trading plan. You may decide to trade on the news. It's totally up to you. So if you do, then here's a pullback here, and you enter right here under this bar. And then you get another entry here right at 9:55. And it's up to you if you're going to take it or not. Now, right here, you can see that you get another reversal trade because we're under the 9 weighted on the broader view. We've got the distance there. And so you can certainly take that expecting price to find its way back up to that 9 weighted. The slope changed on the 30, indicator crossed above 0, so it fills that space. You can look to take this as a pullback entry, except for me it's a pass because my 9 weighted here was still coloring pink, so nothing for me to be able to do there. If yours was coloring green, then you look to take a pullback, either here or here, either way, and then the hope would be that you could find your way back up here to the close from Thursday. You get a short here at 10:04, and I would be looking at this area here as the general area here that that held up. And you can use that or this. I would use this because this did break it, but it failed to go lower, so I would use this area here. Then I wouldn't be doing anything here. You're just going sideways, so nothing really to do there. So I'm not really interested in doing anything other than range trades if it can create an area of support and resistance. And so in this case, for me, it would be the area of the close as resistance, and then this area here as support. So in order for me to want to do range trades, I have to get back up to resistance, and then I'd be willing to do them. Or you can certainly look to set up if everything's in line to do it. But in this case, I would wait to get above the halfway mark. So here, for example, if you're above the halfway mark and everything's in line to take it as a buy. Here, you'd be looking to buy it and you're under the halfway mark. So I wouldn't be doing anything right here because we know that you can get stuck there. And then once you get back up to the resistance area, then you can look to take a short. It fails to get there, so I wouldn't be looking to do a range trade. It would have to get there in order for me to want to do a range trade. Here, you do get a reversal, but the key is you want to take them after a sizable move and with enough distance between price and that 9 weighted. So I'm going to scroll back to Thursday, and I'll give you a couple more examples. Okay, so here's Thursday, and you can see this sizable move here lower on Thursday, and then you can see where price is, and you can see where the 9 weighted is from the higher time frame, and so we would expect price to fill that space. So you get the indicator crossing above 0. The 30 weighted is sloping higher, so you take that with the anticipation of it finding its way back there. And then obviously, if you're in, you got a lot more than you bargained for if you managed it in that manner. But on those reversal trades, I wouldn't really look for runners on those, even though you get lucky here. I would just look for a specific target and take it, like, whether it's 2 points, 3 points, 4 points, whatever you want to shoot for, and then be happy about it. You can always re-enter if it keeps going. So in this case, we're in a downtrend, and I would be willing to take a counter trend trade if price decides to change direction and so does the 9 weighted on the higher time frame. And I have to really be able to see the direction change of that 9 weighted, not just that it's coloring, changing the slope. So in this case here, price keeps going and it pulls back, and I wouldn't be interested in a pullback here just yet, because on the higher time frame that 9 weighted hasn't really changed direction yet, but here at 11 o'clock it does. And so technically you're still against the trend because the Fibonacci 50% area is still above your head. So you would take this expecting price to find its way up to that halfway mark. And so it gets there and it holds, and typically that's what we expect, that the halfway mark will typically hold. And then you notice you get a reversal trade right here with the indicator crossing below 0. You've got distance between price and that 9 weighted. You take the entry and expect price to find its way back to that 9. Now this one you might want to be a little cautious on because of that 200 EMA being right there below you. So you have to know, if you take that, if you get stuck on that, you may have to get out with a slight loss or a break-even trade. So just be aware of that. And so that's how I do counter trend trades. There are a couple other ways that I'll take an entry as well, but this is what you see most of. The reversal trades, of course, and then once price decides to change its direction, then just taking a pullback entry, even though we haven't gotten back above that halfway mark. And you can always drill down to something smaller, like I said, a half-point range chart on the NQ if you want in the afternoon when it's quiet. That can tend to work out pretty well. But the key is, for me anyway, that I need a sizable move in one direction, and then I'm looking to take the reversal. A sizable move, and then I'm looking to take the reversal back to that 9 weighted. So I hope that helps, and if you have any questions, you can certainly send me an email. And again, the information for the webinar is on the site. So take care.